the most effective plan is for your situation, it's going to be the one that you follow and the one that you actually do. I can put together the best plan in the world, but if you don't follow it, it means nothing. It means absolutely nothing.
Does your financial planner talk to you about your beneficiaries, review your beneficiaries? Not only just review your beneficiaries, but talk to you about a will, a trust.
Because if you're not doing the right things in your 30s and 40s, you're going to be in a much bigger world of hurt when you get to your 60s. Thanks for joining us for another episode of The Money Puzzle here on the YouTube channel for Family Wealth Planning Partners. I am Eric Douglas. I'm once again here with Aaron McAndrew. Thank you for joining us. Today we have, I think, a topic that's close to home for both of us here. We're talking about the value of advice and why financial planning works. And since ultimately that's our job, right, is financial planning, we wanted to talk about why it works and really what the true value of actual advice or financial advice specifically is as it relates to the person who's receiving that advice. And Aaron, this was something that you actually came across, so I'll let you introduce the topic, but talk to us a little bit about where you found this.
Yeah, this popped up on one of my social media feeds one day. There was just it was a picture, like an art piece of, just a graphic, and it kind of popped out, and it says why financial planning works, and then it kind of outlines. It's what caught my eye is there's several different topics, and there's arrows pointing to the middle, and it says value of advice, and we're gonna shine this up or share this so everybody can see it.
Yeah, if you're watching on YouTube, you'll be able to see this. Sorry, if you're listening on podcast, you'll have to go to our YouTube channel to see the graphic, but it should be popping up right now.
So what this comes up with is all the different things that really, what it draws in what we do. And it's the value of financial planning. It's value of getting advice, but it draws in what we're doing, because kind of like what we've been talking about in several of these different podcast episodes has been, a lot of people are like, okay, I work with a financial planner, and they think, okay, all your job is to do is manage the money. And that's really just one piece of our job. And this does a really good job of pointing out all the different things we do and what the value of this advice is. So we can start here, and the top, it has financial planning. That's pretty simple, right? That's what we do, is financial planning. And then it has several bullet points down below, and it mentions annual meeting. Well, we do meet with our clients at least once a year, but several of our clients are set up where we meet with them 2 or 3 times a year, and we've got structured review meetings along the line. So that's absolutely part of the financial planning. And ad hoc decision meetings, a second opinion, proactive tax and retirement planning, and accountability are all the different bullet points underneath financial planning. So, several people, you maybe work with a financial planner, so that's where that second opinion comes in. Proactive tax and retirement planning, that is something we talk about. At least that's really one of our, if we do our 3 meetings, that's really one of our meetings. We have a meetings geared towards, at the end of the year, dedicated towards tax planning. So,
well, it's also worth noting we usually do a meeting at the very beginning of the year dedicated towards income.
Yep.
So we're looking at income, we're looking at taxes, and we're looking at investments throughout the year. And we don't need to get into, all the details of all of our meetings, but ultimately we have dedicated proactive planning meetings as it relates to each one of those topics throughout the year.
And then over in the top left-hand corner, the next thing is financial. So, it mentions things like tax-efficient investment, tax planning strategies, which we just mentioned a minute ago, lower cost investing, asset allocation, retirement strategies, estate planning strategies, succession plan strategies. And these are things, notice, a couple of these have to do with the investments, right? The low-cost investments that you're using, tax-efficient investment that you're holding inside of those non-qualified accounts. If you have those, the asset allocation definitely has to do what's in your portfolio, what's the asset allocation that you're using. But a lot of these things also don't even, estate planning. Does your financial planner talk to you about your beneficiaries, review your beneficiaries? Not only just review your beneficiaries, but talk to you about a will, a trust. What is your goals to pass your money on and to pass your wealth on to your heirs? Okay. So is that part of the discussion that you're having? And that's what a financial planner does. So that's a piece. That's one of the things we mention in every single year on the meetings. We review these things. So there's several things. Tax planning on here. What are the best tax planning strategies? Because we talk about when we're looking at somebody in retirement, if you've got a whole bunch of qualified money, and we talk about this all the time, there's going to be potentially a tax balloon there when you hit RMD age. So what's the best way to let some air out of that balloon along the way, depending on what tax brackets you're in and what your income levels are? So all of these on those top two quadrants just struck home, because when I'm seeing that, you can put a check mark next to every single one of these things.
Well, I think the takeaway here is, if you can, see this graphic, and once again, we'll put it up on the screen for you can see it a little bit more clearly, but the top two topics relate to finances and financial planning specifically. And it kind of touches on investments, but it's not like it sits here and says, none of the topics of our meetings are this investment over that investment, right? It's how you should be investing, and maybe doing it in a way that's tax efficient or low cost. That's different than just talking about the investments themselves. Right. Okay, trying to figure out which widget, if you will, is better than another. That's not what any of these discussions are about, and that's not really what makes financial planning work. If that was the case, every financial advisor, should have just said, well, put your money in Amazon and just let it ride forever. Well, okay, that's okay to a certain degree if you have a long enough time horizon, because Amazon's done a fantastic job of returning value for its shareholders. But you can say that looking backwards. Looking forwards, you never knew that to be the case. And Amazon's had, I forgot how many drawdowns of over 50% throughout their history. So if you were looking to retire, if you were invested in Amazon, which has been an absolutely fantastic stock over the last decade, well, what if you were around when one of those 50% drawdowns happened and you needed to start taking distributions from your account? That's not good planning, okay? That might be good investment over the long term, but that's definitely not good planning, and that's probably not going to be, the most beneficial or in the best interest for the vast majority of clients out there that are constructing retirement income plans. So, once again, I'm always struck by how many people think that what we do and what we talk about all the time is strictly investments. And I see it, I'll use the quote unquote, the dinner party, right? You go to dinner parties and people want to ask me about investments and what do I see the stock market doing? And I've had enough people look at me kind of weird enough times now where I say, I don't know. Mm-hmm. I don't know. I can give you an idea. I can give you I can give you a diagnosis maybe, but I don't know any better than you. What do you think the stock market's going to do? And they look at me like, you get paid for this?
Yeah, right.
Well, no, technically, no, that's not what I get paid for. We get paid for doing planning. That's a whole different subject. It's not strictly about picking winners and losers. It's all about income planning. It's about risk management and all of these other different things that you just outlined here. But I really think the value has more to do with the things that we haven't talked about yet, because those are the kind of the financial things. Mm-hmm. And those all make sense. When you talk about financial planning, retirement income, taxes, right, asset allocation, those are all kind of under the banner, if you will, of
what is financial planning.
Yeah, yes. Financial topics, right? And those are the things that you would expect to hear from people like us. I think when you move further around this graphic, as we move into behavior, okay, this is really where I think our job takes on a different level of importance. Because the first bullet under behavior is ensure things actually get done. Okay. And I talked about this in a client meeting this morning I had actually, where we were meeting with a client, and I told them specifically, you know what? I gave them a couple options for things we can do, but I ultimately looked at them and I said, what do you think is going to be the easiest for you to accomplish? And they said, well, I'm not sure, probably this. And I said, well, let's go with that then. And they're like, well, wouldn't you say this might be better? And I said, well, yeah, it might be marginally better, but you know what the most effective plan is for your situation? It's going to be the one that you follow and the one that you actually do. Huh. Because I can put together the best plan in the world, but if you don't follow it,
yep, all it is a roadmap.
It means nothing. It means absolutely nothing, right? So that's why, from a behavioral standpoint, I think our job is infinitely more important when it comes to some of these topics here, because ensuring things actually get done, making sure that you're actually on the roadmap and you're actually doing the right things from a savings perspective to put you in a good position when you get to the point of us having a real retirement income discussion.
Right.
Because if you're not doing the right things in your 30s and 40s, you're going to be in a much bigger world of hurt when you get to your 60s.
Yep. I was actually talking with an estate planning attorney the other day, and this attorney told me that they had a client they put together a trust for. This client did not work with a financial advisor. Well, what happened is somebody passed away, and this client did not update any of their beneficiaries after doing the trust. So they did not fund the trust the way the trust was supposed to be done by titling the beneficiaries to the trust. So what happens in these beneficiary accounts when somebody passes away?
Oh, no.
The trust doesn't matter. It automatically goes, anything that's probated, if they did that, titled everything for the trust to own, but at the same time, these beneficiary accounts pass directly to the people. It didn't go to the trust because they never updated it. So that struck me. Ensure things actually get done. To your point, you put this plan in place. You went out and paid for a trust to actually happen, and you didn't do your work because you probably went home after you signed all the paperwork and thought, well, it's a lot of work to retitle these. I'll do these tomorrow or the next day, and you just never happened.
And you probably paid a lot more money to have that trust done than you did to actually pay someone like us to manage the investment.
Exactly.
That's a shame. Helping make life work, that seems like a very broad topic, but that's one of the bullets on here. But when we say making life work, I think what we mean is making your plans successful. Because what is a retirement plan at the end of the day? A retirement plan is to make your life work, to make you happy in retirement, to make all the different, cogs in the machine work together, right? In order to ensure that you're able to live a happy, healthy lifestyle, right? And so when we say making life work, it sounds kind of broad, it sounds kind of silly, but really at the end of the day, that's what a retirement plan is. It's a plan to make sure that you're happy and healthy in retirement. What do you got next?
These are underneath others. So allowing you to spend the time doing the things that you enjoy. That's a big one. How many people when they get into retirement say, I want to worry about when I'm going to turn my Social Security on, what's the best strategy for me to turn Social Security on? I want to worry about my Medicare. I want to worry about my income plan. I want to worry about not, taking out how much money I need to take out per month and not running out of money. How many people sign up that we meet and say, hey, you know what? I don't want to worry about any of that. The reason why I hire you guys, the reason why I come work with you guys is so I don't have to worry about all that stuff. Come meet with you guys. We develop a financial plan, so I don't have to worry about that. I want to worry about golfing. I want to worry about traveling. I want to worry about seeing my grandkids. I want to worry about enjoying life, because nobody signs up for, I'm going to work 40 years and then I'm going to retire and I'm going to spend every single day playing around with my investment accounts, because that causes a lot more stress in retirement than what it should.
Some do.
Yeah. Yes, you're right. But a lot of people don't. A lot of people that come to us don't want to worry. That's one of the biggest things that they say is, I don't want to worry about this.
Oh, for sure. I think I'll add to that too. Support during volatile markets. This has absolutely nothing to do with investment return or planning, really. This is completely all emotionally driven. Support during volatile markets. And I'll go back to 2022, because this happened a lot during 2022, where we were having client meetings throughout the year, and all they do is, watch TV, they read headlines, they see the news, and, everything in the stock market is collapsing and everything is bad and interest rates are super high and inflation's out of control. And they come into our office and they, some people were freaking out in 2022, not because of anything that we said or did or anything really with the way that their own portfolios were performing. It had more to do with kind of the outside noise, if you will. So a lot of what we did in 2022, and I can count just numerous examples of this happening, where clients walking into our office a little nervous about what was going on in the world. And then we sit down, we go through their plan, we review their plan, we show them their current trajectory, and we said, you're still on the same trajectory that you were last year when the markets were up, and everything was fantastic. Nothing has changed for you specifically. You are still on track to live the lifestyle that you want to live. You can still continue to take out the same amount of money. You can still continue to go on those vacations that we planned for, okay? And this goes back more or less to our risk-off retirement system that we've implemented for all of our clients. But there's that ability for them, there's that support for them during volatile markets where there's a place that they can come in and know that, okay, they have a sounding board that they can trust, that they can, and we can show evidence for to illustrate very specifically that they're still on the right path. Because any retirement plan that we put together is going to include bad years. It's inevitable.
100%.
You're going to have bad years. Not everything is going to be up, and hunky-dory. And so when we plan, we're planning for the bad years just as much as the good years. As long as we're making sure that we're building that into the plan effectively, our clients have that support during volatile markets, and they don't lose an ounce of sleep.
Right.
Or they don't lose a minute of sleep, I should say, because they know that they're still well taken care of and everything's going to be okay.
Right. And then decisions, I mean, when markets are down and your portfolio's down 15%, 8%, 9%, 20%, whatever risk tolerance, whatever the percentages you're down, okay, decisions become emotional. Money is emotional. So part of that, when we're talking through those decisions and we're showing them, hey, the account might be down 18% right now, but your financial plan still works. You still have a 90% or higher probability of success of not running out of money and your plan working till you live to the age of 95. You still have a 90% or higher probability of success of passing this much money on to your heirs. So when they see the account balance being down 18%, that goes back to some of our previous conversations, is it's not about beating the market. It's not about getting the highest possible rate of return you can possibly have. It's about having a financial plan and earning the rate of return you need to earn in order to ensure that you are successful. That's the biggest mistake people make, is that, how much did you get? I hear them all the time. My 401k was up 18% last year, but maybe somebody only needs to take on the risk to earn 7 or 8% to get to be successful, or 5% to be successful. So going back, we are sounding board. We try to take the emotional decisions out, to try to take the emotion out of the decisions that people are making with their money.
I'd even go a step further. I mean, because absolutely money is emotional to everyone, right? Especially when it's your own money.
Yeah.
So we definitely provide a sounding board for, logical decision making, right? But one thing I like to do, and these are some of my favorite conversations, is, okay, money is emotional. Well, let's make sure that we address the emotional part real quick and figure out a way to alleviate your concerns. Once those concerns are alleviated, let's switch it around and let's go to the other spectrum of emotions, right? And let's talk about some happy things. You know what? We just illustrated you're okay. We just illustrated your probability of success has not changed. You are still doing all of the right things. You are still on track. You are not going to run out of money. Let's figure out a way to spend it. Right. Let's figure out a way to have some fun. What can you do with your money? Do you want to go on another vacation? Do you want to take your grandkids on vacation? What is it that you want to do? What will make you happy in retirement? One specific example, and I talked earlier about, clients during 2022 feeling a little bit uneasy. There was one specific client that walked in and he was a little concerned, and his wife wanted to redo the kitchen. He had just retired recently, and he's like, well, I'm a little nervous. I see what's happening. My wife really wants to redo the kitchen, but I'm a little nervous about taking the money out. I already knew what the answer was going to be, but I kind of humored him and I walked him through, and he needed to see the illustration, right? So we walked through it. And at the end of the conversation, it's, oh yeah, by the way, go do the kitchen. You absolutely. How much money do you need? Go do your kitchen. Is it going to make you happy? Is it going to make your wife happy? Absolutely. Go do the kitchen. You're going to get more enjoyment out of that kitchen than you're going to get out of that money sitting in your bank account.
Yeah.
Okay. Sitting in your investment accounts. Sure enough, you went to do the kitchen, and about 6 months later, I got a call. Yeah, my wife wants to do the deck now. So, okay, go do the deck, right? But those are the things that are making them happy in retirement. And those are really, really fun. They're emotional, but they're fun, emotional conversations to have and to help people with as they go through retirement.
I think that kind of segues a good into peace of mind. It's a little bit about that too. That's another topic in here that was at the very end. It's the last one that we'll go into. But putting your affairs in order, right? Going back to that estate plan that we're talking about, that trust that I mentioned, part of the reason why you do the planning is to make sure that you have checked all your boxes and if everything happens the way you want it to happen, right? Or the way you're trying to make it happen the way you want it to happen. So whether that's when you retire, because sometimes people have retirement goals of 65 and something happens where they end up having to retire at 63 because they're offered a buyout or something and a severance package and everything like that, and that may derail their retirement. So we've got to meet again and discuss, okay, what does that do? What does that look like in your plan? And then we just readjust the plan to plan for that. So peace of mind is huge, and that's what a financial plan can give you is peace of mind. A plan for anything. There's that, like we were talking about, you're building something, you're building a deck. They're not just the deck you're talking about for those clients. They don't just show up one day with the wood and everything else and just do it. There's plans that go in place.
Start hammering nails in place. Yeah.
Exactly. There's plans that go in place. A financial plan is ongoing. It's called planning for a reason. Okay, it's ongoing. So, but it gives you peace of mind and reassurance. These are things that are listed on this graphic about underneath peace of mind. Financial planning will do for you.
I see this a lot with DIYers that have come through our office in the last couple of years as markets have gotten a little bit choppier and a little bit more volatile. But they come in, I've always done it myself. And quite frankly, it was easy to do it yourself between the years of 2009 and 2022 because the market was up for 13 years, basically. It's pretty easy to be a DIY investor. But when you get into retirement and you start seeing markets get a little bit choppy, it takes a different skill set. And we've talked about this a lot. There's a different skill set between accumulation and creating an income plan. And so it's been interesting watching DIYers that have gotten a little bit skittish and have become a little bit more uncertain about whether or not they're doing the right thing. And especially when you start putting it in the context of, okay, well, now I have to make sure I'm taking care of my wife. Am I qualified to be able to, make sure that I'm making these decisions in her best interest and not only mine? Because it's one thing if I screw it up myself, but if I screw it up for my wife as well, okay, that's a different story. So seeing DIYers come into our office strictly for the peace of mind, right? Strictly to make sure, okay, I can offload this. I don't have to worry about it all the time anymore. There's someone else looking out for me. There's someone else looking out for us and my family. I can feel pretty good about it. And I'll even add one more that's not even on this sheet as well. Peace of mind knowing that your spouse is taken care of after you're gone. Mm-hmm. Because there's so many moving parts, and it's unfortunately a fact of life. And I just found out last week I'm going to have another situation here pretty soon where I'm going to lose a client, and that's always really sad when we go through that process, of course. But it is a fact of life. Death is a fact of life, and we have to prepare for it. If you're a DIY investor, one, does your spouse know where everything is? Right. And then in turn, is your spouse going to be able to handle those things? Because now he or she is going to be a DIY investor themselves after you're gone. So not only are they going to be overly emotional because they've just lost their spouse, now they have all of these financial things to consider that they're not well equipped enough to handle. Right. If you have someone that you were working with, if you were seeking professional help, financially speaking anyway, but if you're seeking professional financial help, there's someone who can help guide you not only while you're alive, but to guide your spouse after you're no longer here. And so there's a huge amount of comfort, a huge amount of peace of mind, knowing that not only are you taken care of, but your family is taken care of as well.
Yeah. I think that's a good way to button this up.
Yeah. Thanks for spending some time with us again. We hope you enjoyed this episode on the value of advice. If you have any questions about your own situation or would like to discuss or receive some advice from us, please definitely check the notes under this video. Go to our website. You can schedule a call. Feel free to give us a call directly if you would like. Once again, this is Eric Douglas, Aaron McAndrew. We would love to speak with you about your specific situation and talk to you about how we can help cater a custom income or retirement plan for you as well. Thanks.